Hello and welcome to another edition of Birmingham Business TV. We are with our friends of Evelyn Partners in a room with a view in Colmore Row in Birmingham, a fabulous location, and we've got a huge range of topics to get through with you today. We've had 2 or 3 days now to digest the findings of the budget. And of course there's been plenty in it. The most important budget, some people have said, in a generation, the biggest tax raising budget in many years, which means there's lots of things for my first 2 guests to talk to right now. So Matt and Emma from Evelyn Partners, introduce yourselves, tell us a bit about your roles particularly here.
Yeah, sure. So I'm Emma Queen, I'm a business tax partner, so I look after private businesses, primarily supporting them on their growth and succession strategies on all things tax.
So Matthew Hughes, I'm a partner here too. I work in the private client sector, which means I do a very similar thing to Emma, but what I focus on is the entrepreneurs and the business owners themselves. But typically we will act, if you think of a Venn diagram where you have a business and their owner, both of us will try to operate in the overlap between those 2 sections.
And actually there was quite a lot within that Venn diagram overlap in this particular budget, wasn't there, particularly this time? Yeah,
absolutely. A lot of capital gains and inheritance tax changes have been the ones that have made the headlines.
If I asked you to say, well, where was the most important thing to start, what would be the topic that you'd say, right, the first one I want to talk to you about is?
For businesses, employers' national insurance.
Did it surprise you? I mean, we seem to have had all the headlines for the budget before the budget came out, much to the dismay of the Speaker of the House of Commons. But even then, you don't quite know the degree of the increase.
No, I think we weren't surprised by the percentage increase of the 1.2% from 13.8 up to 15%. Nobody fell off their chair at that. The bit that really took us back was reducing the threshold to £5,000, so pretty much halved the threshold, which brings a lot more businesses into the scope of having to pay this tax. So that's where I think it's going to really bite. And
pretty much doubles the amount of money that Rachel Reeves earns through the change, doesn't it?
That's exactly right, yeah.
What can employers do about this? I mean, is it employers at the sort of who employ people at the lower end of the wage spectrum that are hit the hardest by this then, is it?
I think so. Obviously there was that change. I think then there was the change around the national minimum wage going up, and even more so for young people. And then there are kind of these new workers' rights and moving much more towards not quite the French model, but looking towards that direction. So I think it's the package of those changes brought together that is really going to impact businesses, and naturally it's going to impact those businesses with a large number of lower paid workers. So your retail, your hospitality, that sort of industry, they are going to be hardest hit.
Can you see what the government's trying to do? Can you see the joined up picture from all of this or not?
With the employers' national insurance, because they'd said in the manifesto we're not going to increase employees' national insurance, income tax, corporation tax or VAT, they had no other choice to raise that amount of money. There's no other tax they could have gone after. So I'm not shocked in that sense. That's if she needed 40 billion, then 2025 had to come from employers' nick.
And Matt, let me ask you the same question. If there's one headline from your side of the operation.
Well, I think ahead of the budget, all the talk was about capital gains tax, but that actually ended up being a relatively modest increase. I think the most explosive change was that of IHT relief, so business property relief and agricultural property relief. I think that came as a big shock to family business owners, and I think will have really significant impact on how they behave over the coming generation.
And the capital gains tax side of things, I'd heard stories of how people who'd maybe been thinking about selling their business in the next year or 2 were suddenly rushing to try and get sales through before the budget, fearing that it was going to be a lot worse than it is. Do you still think what's happened is going to keep that trend going now?
So there certainly was a lot of activity ahead of the budget with transactions that were, I suppose, in process being accelerated, but to complete beforehand. I think that will probably slow a little now because, as I say, the rises were modest. But what I think is quite interesting generally in this budget is we think of tax as a way of influencing and modifying people's behaviours, and typically the policies of governments over the last few decades have always been about encouraging entrepreneurship, encouraging risk taking, because that's what generates wealth for the economy, that generates employment. I think a lot of the changes that were announced have rode back on that type of policy, or in some cases completely reversed it, and I think that's probably what causes most worry for businesses and their owners at the moment.
And you talk about tax changing people's habits, lifestyles. I guess some of the inheritance tax rules, particularly around the agricultural industry, is really going to change the way people think, isn't it? And this is an area, I guess, for both of you, isn't it?
Yeah, I think that it really was a big change, and whilst there had been rumours around this, I think what's actually come out was, as I say, was quite explosive. I'm supposed to give that context. So business property relief was introduced about 50 years ago, and its purpose really is to limit disruption to businesses when the owner passes away, so the asset can effectively pass free of IHT on death. And that's been rolled back now, so that actually relief is effectively halved above a certain threshold, so above $1 million. And I think that's concerning to family businesses effectively, because there was a non-political objective behind that relief. This isn't a tax wheeze or tax avoidance, it is to stop shocks to businesses when an owner dies. And of course, when an owner dies, that is a shock to the business in itself, in that they may hold key relationships, they may be the driving force behind the business. And now we're in a position where families and businesses are going to need to find cash to pay the IHT. And I must admit, I question that as a policy. So I think in 2022, the combined reliefs, business property relief and agricultural property relief, raised £1.5 billion cost £1.5 billion in terms of release given for the Exchequer. So, forecast to raise that going forward. That is a tiny amount of tax. And actually, when you consider the risk that this introduces, so will businesses hold more cash and lower investment to protect against this? Will businesses sell up? And could that be to a foreign owner, for example? And if we sell to a foreign owner, then do we remove that business from the scope of UK tax entirely? Do we have the workforce being offshored, for example? These feel to me like big risks of, lack of other tax revenues through payroll, etc., and general GDP. And I'm not convinced that the upside of the additional tax is really worth this risk. SMEs, I think, are responsible for about 60% of the employment in the UK. And so these were really valuable protections that have had significant reductions applied really without any public debate or any professional consultation. And I think we're all quite concerned about that.
I think that's what's angered a lot of people. There wasn't any consultation on this with the business community or the farming community. So it has landed as a shock, and I think there is going to be a lot of pushback.
And I guess one of the reasons the agricultural community is so uptight about all this is that you've got the £1 million that's exemption, haven't you? But there are no farms really, because the land holding, the small holdings, that are going to be worth fewer than £1 million, aren't they? They're all going to get caught by this.
Not many. That'd be a small holding in most parts of the country. Yeah, absolutely.
And I think you add to that, obviously, the uncertainty around food production at the minute with Brexit and the EU subsidies falling away. I think it's a very difficult time for farmers and agriculture in general.
So this is really going to be of concern to maybe people, farmers or agricultural businesses where the current owner is towards the end of their career. And the other option, I guess, would be to start sort of gifting part of their business across. But if they haven't got time to do that, they haven't really got a way out, have they?
Yeah, and I think that's what we'll see in the longer term. People will have to bring succession planning forward, because one of the things that we thought might have changed in the budget that didn't was that sort of seven-year rule. The best inheritance tax planning you can do is to gift something and survive that gift by 7 years. But for some people, that's going to be too late. And so, the whole plan that they had for their succession, for their family business, it doesn't work anymore. And actually, they've not got time to put anything else in place. But yeah, longer term, I think that's what will happen. We'll see gifting come come forward somewhat.
But that in itself is quite interesting, because at the minute, with 100% relief across business property relief and agricultural property relief, people could make commercial decisions and family decisions. So when is the best time to pass the business? Is that in lifetime? Is that on death? Is that to a trust, for example? And you had quite a lot of flexibility, and your decision wasn't really driven by tax. But now we're in a position where actually, because of these reliefs falling away and lifetime gifting to a direct descendant or other family member becoming probably the most attractive option from a tax perspective, we're in this position where we have the tax tail leading the dog. And actually, is that the right commercial decision? Is that the best thing for the business? It may not be, but entrepreneurs and farmers will be influenced by tax. So we go back to this point of tax is there to influence people's behaviour, and I'm not sure we've shifted in the way that we really should be focusing on, because we're focusing now on tax instead of commercial decisions.
And this can't have been the intention of the government. The message that's coming out of this is they want it to be a budget for growth, a budget to free people up, to want to expand, to invest, to be entrepreneurial. How does that all piece together with that objective?
It doesn't, to be honest. I don't think anybody is now sitting back and reflecting that was in any sense a budget for growth. It was a hard budget. It was a hard budget for business to swallow, certainly. Yeah, I just don't think you can.
I think the government should be very worried about unintended consequences. So we haven't spoke about it yet today, but the IHT regime has changed as well, effectively, so that if you leave the UK for more than 10 years, you will fall outside of the scope of UK IHT. So will these changes in combination push business owners to leave the UK, perhaps in their 50s or 60s, so that actually these assets ultimately can fall outside of the scope of IHT entirely, and then you have an owner that's no longer connected to the business because they're living overseas? It just doesn't add up to me as a pro-business or sensible sort of plan, if I'm honest.
I mean, aside from IHT, there was already a suggestion, wasn't there, that some of the other measures that were being trailed in the budget might provoke a lot of business people, particularly in the wealthier end of the spectrum, to look at leaving the UK as well. So
yeah, and we've seen the non-dom rules scrapped. That's probably a popular decision for the electorate as a whole.
And that would have happened whichever government had been elected, wouldn't it? So
certainly no surprise, but there is a question of, what impact will that have? I think those non-dom rules, despite being perhaps unpopular, they served a purpose, which was to attract high net worth individuals from outside of the UK to come into the UK, spend money in the UK, hopefully set up businesses in the UK. Now, clearly, whether that happened or not is an area for debate, but it may not happen so much going forward. And ultimately, what impact that has on the economy and tax revenues is, to be seen, I guess.
You mentioned, that some of the things have been introduced without consultation. One of the things I'm right in saying that the government are consulting on is this idea of bringing pensions into an inheritance tax arena as well. That's a very complicated thing to actually do, isn't it, from a practical point of view?
Yes, and I think that's going to impact financial planning for a lot of people. So pensions have always been able to be passed down to the next generation without any inheritance tax. That is just one of many tax reliefs attached to pensions. So they have been a very tax efficient vehicle to invest in. But that shift now is going to mean that people's pension pots won't be left until last. People will be looking at their investment portfolio more widely and revising their strategy.
Could this have an adverse impact on the number of people that actually want to invest in pensions now? Then, or?
Possibly, and I think we go back to that point of tax influencing behaviour. We could now end up in a position where, let's say an individual has £1 million pension pot when they die, and that passes on, so there'd be 40% IHT on that, and then the beneficiary drawing it out could potentially be subject to 40–45% of income tax as well. So you end up with an effective tax rate of about 64%, which doesn't seem to me like a high incentive for people to save during their lifetime. So again, it's this I suppose there's a friction between raising revenue but then having people behave and incentivising the behaviour that you want to see in the economy. I think the pension thing's less contentious than some of the reliefs, because you could argue this is to make people spend their pensions, which would have a a positive effect. But yeah, it just forms part of this picture, I think, where we're not necessarily aligning the tax system with the behaviours I think we probably all want to see in the UK.
I get reading some of the headlines in the first couple of days after the budget. My impression was the biggest worry from a pension point of view is that now that this has been done, is there a fear that pensions are fair game for other attacks, for want of a better word, in current, subsequent budgets? Or
we don't know.
Where's your crystal ball? Come on,
we don't know. We have thought a little bit about that, particularly with capital gains tax. That didn't go quite as far as a lot of us had feared. So I think there is scope to do more in the next budget. I don't expect the next budget to be a quiet one, or particularly, or an uncontroversial one.
I think the two changes that people are worried about on pensions were reducing the tax-free lump sum, and I feel like the government have veered away from that, because that would feel grossly unfair if people have saved their whole life and have earmarked a pot to come out to pay off a mortgage or something similar to change that. So maybe that is a low risk of change, because again that would be sort of deeply unpopular. I think the other change that was touted significantly was effectively capping the level of income tax relief available when you put money into a pension. So high earners can currently get a lot of relief, and I suppose there's a question as to whether that is what the government wanted, because actually it's probably low to middle earners where they really want people to be encouraging to put into a pension. So that's possibly a more likely change than the taxation of the lump sum.
Was there anything that you were surprised wasn't in the budget?
Growth strategies. No, I don't think so.
I mean, most things were in the budget, to be fair, weren't they? It was a pretty busy one.
Looking back on it, it was very much focused on businesses, and businesses don't have a vote, and the people do. So I think that's quite an interesting tactic there. There were a few things where consultations were announced, so around kind of employee ownership trust, there were some consultation comments issued, business rates review again, more consultation. So there's lots of kind of things they could have gone for, but it was more sort of planting the seeds of change in the future that we saw. There wasn't anything that wasn't in the budget that we thought would have been.
Have you spotted anything in the small print? Because you get the headline findings, don't you, when the Chancellor stands up, and then they always say the devil's in the detail, and you've got to pour into the report and find some of the things that maybe weren't actually championed.
Well, I think the things that people should be careful about in general are where changes are announced to take place from April 26, say, or April 27. In the fine print, there are often what are called anti-forestalling rules, which basically stop you doing things before April 26 or April 27 to avoid the rule changes. People should be very careful about that and take proper advice before they go ahead and implement plans.
Anything that you would have liked to have seen that wasn't?
I think the key thing for me that we didn't see is rewarding entrepreneurship. We look at capital gains tax rates now, and it was only sort of 6-9 months ago where the differential in tax rate between selling a business and selling a second home was 18 percentage points, and it's now 6 percentage points. And I go back to the same point, that just doesn't feel like the type of tax system that we want to encourage risk-taking and entrepreneurship and building a business. And I just wish we'd had more that aligned, I think, incentives with behaviours in a way that we wanted to see them.
Have you had time to assess what the reaction's been with some of your clients? Have you had conversations with them already? What's the mood?
Yes, yeah, absolutely. I think, like I mentioned earlier, those clients who employ a lot of lower paid workers, so with the minimum wage and employers' national insurance and the workers' rights to consider, they are, now very much in planning mode at least, and thinking about potentially changing their business strategy, and is this going to be affordable? how do I plan in the long term for this? So yeah, definitely a bit of a pivot in terms of looking at the commercial strategy. I think more widely, when you're looking at succession, people there'll be more capital transactions. I think there's now more incentive to sell your business rather than pass it on. So yeah, we're going to see a mixed pool of investors, I think, as Matt alluded to earlier, coming into the UK and taking ownership of UK businesses.
Matt, what from your point of view, what do you think?
Pretty similar, actually. I think you're absolutely right. I think there was mixed sentiment from clients. So I think they were relieved at some of the CGT changes. For example, didn't go as far as you mentioned they could have gone, but you know, things like IHT, etc., that came out of the woodwork were a shock to them. But you know, businesses will adapt, and they will do what they need to do. And we just hope, I think, that the next budget, you know, brings a bit more consistency, and we have some clarity over what's going forward in the future.
So if you're giving this budget a mark out of 10, maybe then, based on what you'd hoped it would do and what it did, where does it stand? Who's going to be brave enough to go first?
Well, I think look, I'd start with 2 out of 10. I think maybe when you take into account that they did need to raise revenue, I might be generous and give it a 5. But no, I don't want to keep labouring the point about, you know, influencing people's behaviours, but frankly, I think they made a lot of big decisions, and I can't see that they've got many of them right.
Yeah.
It's been tough. What do you think?
I'd have gone 4 or 5. 3 for the entrepreneurs and business owners and people really looking to build business and wealth. It was not a good budget for those aspirational people that we want to be here. We want them to be successful and achieving and employing the people in our communities. From a larger business perspective, we did have some certainty with the publication of the business tax roadmap. Now, there was nothing too dramatic in there, to be honest, but it was a commitment, and it was a commitment to, you know, a certain path that we're going to be following now, and just that helps businesses to make investment decisions. They can make more informed choices, so that is a positive, that certainty.
And it certainly means you're going to be having lots of conversations with lots of people about lots of different kinds of things over the next few months, doesn't it?
We were very busy in the run-up to the budget, and we were hoping we might get some downtime, but I don't think that's going to happen.
No holiday, no downtime over Christmas, New Year. Forget about it.
No.
Forget about it. Matt, Emma, thank you so much for your time. Really great to catch up.
Thank you.
Thank you.